Oh, yeah.
Okay.
Yeah. So we are getting started. So today's going to be very informal. Needless to say, very informal. Very excited to be able to welcome the people that are here and also the people that will be tuning in via the recording, because we understand that, you know, there's different ways of getting the information, and especially for the new entrepreneurs, they want it at their leisure as they can accommodate things. So I think we all know each other, so we'll go ahead and skip that part. But just as far as how today will proceed, as I said, very, very informal, but just a little bit of background, and then Mr. Mott will take it, as well as answer all questions, and then we'll talk about maybe some upcoming trainings, seminars. And we just start with the background that 2018, there was a book that came out of a panel study, and from the wording in the book, this comes straight out of the book, it was recommended that we try to access some USDA Rural Business Development grant. And after 2 years of writing, we were successful and able to get some funds to support our area. But it was recommended as a part of the study. So this is something good that came out of the book, and now it's incumbent upon us to make it effective. Oh, we got a great, and the nice thing about it is, we don't have to go to Baton Rouge, we don't have to go to Lafayette, we don't have to go anywhere, because the talent is right here. And a lot of times, we forget that we have talent right here. So I'm very impressed to have Mr. Mott here today, that he agreed to help us out. His accounting comes from Nicholls State, certified public accounting, doing just tremendous work. Tax services for retailers, manufacturers, contractors, shipyards, and local government. And you can't forget his once the former mayor of Morgan City there. So with that being said, Mr. Mott, informally, can you kind of take us through kind of growing this area through business budgeting?
All right, well, thanks, and it's a pleasure to be here and spend this time with you guys this afternoon. We'll start out kind of with some basics, but you know, what is budgeting? I guess the first thing I would say that what the purpose of my topic is not to put you on a budget, because I know that that's always been a real sore subject for a lot of people. Okay, you know, I don't want to be on a budget. You know, you never know what's going to come up. And that's really not what we're talking about. What we're really talking about is a budget, particularly in a business setting, as a planning tool. And it has a lot of purposes. One of which, of course, is in evaluating perhaps the purchase of a business. You know, if you were going to either start a new business or purchase a business, you might want to evaluate that in a concrete sense, without just saying, you know, they look like they have a good business, I think I'll go into that business. You know, or the circumstances of an existing business. A lot of times it's a what if type analysis. What if I add a new location? What if I buy this new piece of machinery? What if I do this particular project? What is the impact on my bottom line and that type of thing? So it's one of those real keys. I know we share some governmental folks here, and you know, you in the governmental setting, in most governmental settings, a budget is required. You have to do it, and it's done for the purpose of really establishing some guidelines, because you know, a government is not just an individual making decisions, it's a collective. And so that collective coming up with a budget on which to base your operations is a key towards providing that good management. So in a business sense, as I mentioned, we start out first off, let's say with an existing business, okay? And an existing business is probably the easier one to prepare a budget, because hopefully you've got some experience. You've got some number of years or some number of months at a minimum of some operations, so you kind of have a feel for what your expenses may be. And particularly, as I mentioned in this what if analysis, it then becomes, okay, if I take everything I'm doing today and I add to it another location, what are the costs of that new location going to be? How many people am I going to need to operate that? What would be the increase in my insurance, my property taxes, my utilities, all of those kinds of things. And then from there to try and project, well, what would my sales need to be or my revenue need to be in order to pay for that? And that's always a good way to start. In the case of I'm evaluating a business, I've approached this individual, or I've been approached, hey, would you be interested in buying my business? Okay, well, I don't have any experience yet in that business, but the first thing I'm going to do, hey, would you give me copies of your financial statements? Would you give me copies of your tax returns? Would you give me copies of your sales tax returns and other documentation so that you can sit down and evaluate whether or not that business is viable and has that net worth that you are either going to be asked to pay or that you're going to propose to pay. So that provides a basis for you to start in that budgeting process. Is okay, I'm going to take this historic information and now I'm going to look at it from a context, okay, what would I do differently perhaps to modify those numbers? What would would it cost me more to operate it because I have to hire more people than what this particular business owner is operating, or would I be in a position to be able to do with less personnel and so forth? And you obviously you always, if you were buying a business, you would always look at it from the perspective of, well, I could do better than they doing. I'm going to do some things that are going to make it better, make the business more viable. And so in that particular case, I would modify those expenses and come up with a number. The most difficult circumstance in which to probably prepare a budget is when you're starting a new business. And that's where, okay, well, I really don't know what it may yield in revenue. I don't know what my costs are going to be. Well, if you're going to start a new business, you need to come up with those numbers. You need to somehow come to the realization of what those costs are going to be. So how do we go about doing that? As I said, in starting a new business, that's going to be a very more difficult task. And let me make one comment here too. Feel free to ask a question, just please. I don't have a prepared presentation, so it's not you're not interrupting anything. We can cover whatever territory we need to cover. Okay, so the first thing you want to do is come up with your fixed cost. In any business operation, you have fixed costs and you have variable costs. Fixed costs are those that are not going to really vary. They're going to be a monthly, an annual, a weekly type of cost. Probably the best example of that, if I have a facility, I have rent. If I have to rent a facility, then that is going to be $2,000 a month, and that's what I'm going to have to pay. Whether I sell one widget or I sell 1,000 widgets, I still got to pay $2,000 in rent. Sometimes insurances, some portion of insurances, so on down the list of expenses. And speaking of list of expenses, what I did here, one question I get a lot of times in evaluating a business is, well, what can I deduct? What are the expenses that I can that I can deduct? And so what I did, I pulled two documents here. This is these are the input sheets and the first page of a corporate tax return, because it has a list of expenses that are on there. And these certainly aren't all the expenses. And just because they're listed doesn't mean that everything that falls into that category or description is deductible, but it gives us maybe a place to start for the types of expenses. So in evaluating a new business, the first thing I would do would be to run through this particular list and say, okay, what do I think my expenses would be under those circumstances? And sometimes it's, just a guess in some cases. It's just purely a guess of what it might be. I would, encourage anybody who was doing that, though, to take the time to come up with an informed guess. And by that I mean, let's use insurance as an example. I'd pick up the phone and call an insurance agent and say, look, this is what I'm thinking about doing. This is what my business would involve. It's the business idea. Do you have an idea of what that insurance might cost me? And of course, it's their job to come up with that, so it wouldn't be a problem for them to do so. And then what would make those numbers different? In other words, like one might be, it depends on your payroll. That would be if you're paying workers' comp insurance, and particularly if workers' comp is a significant part of your, or if payroll is a significant part of your expenses, then that's going to be one that's going to vary. But insurance, rent, property taxes, utilities may or may not, at least some portion of it's going to be fixed. All of those types of things. If you're a home-based operation, then, or particularly if you're a home-based operation to start with, which I see a lot more of that these days, then some of these expenses may be fairly nominal in that particular regard, and it may all fall into more of the variable cost. Now, variable cost, the best example of variable cost is going to be cost of sales. So if I'm selling a product, every time I sell one, I got to pay for it. So I got to buy it. So that becomes the best example of a variable cost. So in that particular case, what we do in budgeting that is you're going to budget, of course, an inventory that you may or may not have to have on hand, and then you determine what your markup is, so you can calculate your cost of goods sold. So what is that? If I buy a ring for $50 and I sell it for $100, then I've got a 50% gross margin on that, and so I have a 50% gross profit on that. That's your cost of goods sold, and that becomes the way that you budget that. And of course, like everything else, you'll have some variation in that. Not everything will be sold at the same rate, and you'll also have discounts that you'll have to give, perhaps, to move product and so forth. And perhaps your gross profit percentage will be smaller to start with and grow over time. But there again, budget, that becomes a good tool for using in making decisions about what you can afford to discount and that type of thing. One other, I guess, strategy I think in budgeting and particularly in starting a new business, probably a little bit more appropriate in a service type of business where it's more about delivering a service as opposed to a product, but still the same thing. You can do a bottom-up type of analysis, and that is, I need to make X number of dollars. And so you might know your personal living expenses. I need at least $50,000 to pay my household expenses. So that is my net profit that I need to have. Now I start with that number and I work my way back up, adding all my fixed costs, adding in the variable costs to come up with what I need to sell. And then you evaluate your business on that basis. Is this worth the effort? Can I generate $222,000 worth of revenue to pay all of my costs and to end up at the end of the day with $50,000? Just like I said, it's a bottom-up approach. With an existing business, as I said, you typically are saying, well, this is what I've been doing, or this is what I've been doing. Can I repeat that, or can I make some changes to then modify that number and get that number higher? Tools-wise, of course, Excel spreadsheets are really a great tool. If you look online, there's a bunch of templates for budgeting, but understanding those ratios, the ratio of a particular expense to that revenue, particularly on the variable cost, is an important concept that needs to be developed. It's a little easier on an existing, much more difficult, of course, on a brand new business. There are some other resources, though, that can help with that. We, over the years, because remember from that slide, I've been doing it for 40 years. So in our library, we have a book, RMA book, which has business ratios in it, and so you can look that up. Today, I don't think anybody's gone into the library to pull that book in a long number of years, because it is all online, and those types of statistics are available generally online. But those are all good and important exercises to go through to try and get yourself to the position where you say, all right, is this worth my while or not worth my while? Is this worth this investment and not worth the investment, and so forth. The other, I guess another place that I think budgeting does come into play is in helping you make day-to-day decisions in your operations. If you do have a budget in your, as an existing business, or you have a certain amount that you budgeted, when an expense comes in higher than what you expected it to be, or sales aren't really what you expect them to be, it gives you a place to then look down the line and say, okay, where do I need to make an adjustment in order to make a change in my operation to protect that bottom line, to protect that number. The other thing that a good operating budget can do for you is help you to come up with the amount of capital that you're going to need in a business. And this is something that we've worked with clients over the years on, and in some cases might even be required to present to a bank when you're going to the bank to borrow money to start your business. One, they always, there's a couple of things they're going to see. First off, they want to see some equity, meaning you're going to have some investment here that is going to be in the business to stay. Number two, they're going to look for collateral, and in a lot of cases, a lot of clients over the years have kind of stopped there and said, well, I'm borrowing against my house, or I'm borrowing against this real estate, so what difference does it make? Now, there's another important component. The bank wants to know that you can pay it back. They don't want your house, and they don't want that other piece of property. They want you to repay the loan, and so in that regard, often in a business financing circumstance, they're going to say, we want a projection, we want a financial projection where you show that you have the ability to do that. And it's really a budget, that's really what you're presenting them in that particular case. And so then if, as I said earlier, if the sales don't quite meet what you expect them to be, or if, I thought the insurance was going to be this, and instead it turns out to be that, well, where else can I modify and say, okay, well, maybe I have to do without a little bit of this, or reduce my expenses here in order to make that bottom line. The other place in regards to the projection, and that we've also done this, and there again, sometimes for the bank, sometimes just for the client, is to look at what the cash flow is going to be, because in the best example in this particular case is where I'm selling a product. So I'm going out and I'm paying X number of dollars. So I'm putting maybe $25,000 worth of inventory on the books. Well, I haven't sold anything, so I've just got an outlay of cash of $25,000. On my profit and loss statement, I don't have a profit, I don't have a loss. I'm at break even, but I've expended out $25,000. So how long is it going to take me to recover that money? Because every time I sell something, I got to go replace it. So I got to go buy it. I'm making a profit, but I'm also paying these other expenses. And typically, depending on the nature of the business, of course, if I have to sell some of that product on time, meaning my customers are not going to pay me for 60 days. Most of my vendors, particularly if I'm a new business, they want to be paid before I take that product off their shelf. Or if I'm an established business, I might get some time, but maybe I'm paying for it in 30 days, but I'm having to wait 60 days for my money. And it was always the classic situation in the oil field. That was always one of the complaints. we had to wait on our money, but we had to pay for everything up front or on a much a quicker time frame. So this budget and taking it down the bottom line and then factoring in the amount of time you have to wait on your collections would then produce a cash flow. So, okay, I'm going to have negative cash flow for 4 months, then I start having some positive. So from that, you then would figure out how much working capital you might need to also have. So I'm going to borrow $25,000 to put some inventory on the books. I'm going to borrow $50,000 because I need this piece of machinery, but I'm also going to have to borrow another $40,000 just to cash flow the business during that time. All of that has to be taken into consideration in a budget, and that budget process is the approach we would take in order to come up with those numbers. Then one other thing, and I've mentioned it a couple of times, but we'll go back to the what-if analysis. And the what-if analysis, is that whole process of I want to make an investment. I have a machine and it produces this quantity, and my sales are approaching that. Can I afford this next machine? And how long will it take me to get my sales up to that amount? How many other people will I have to bring on? And so you can run that, knowing that your fixed costs are going to basically stay the same, except for this new investment. Put in the variable costs that are directly associated with that to see how long it takes you to pay that off, to then determine the risk. Because really all of these business decisions, all of these decisions all involve a certain amount of risk, and it's a question of, well, is that a risk I can stand? Can I do without a paycheck for X number of time? Can I do that knowing that I'm not going to make a profit right off the bat? That it's going to take me a little while to do that, and put you in that position to hopefully make a good decision. As I mentioned earlier, when we talk about existing businesses, either I'm buying or already have a business and I'm just employing this as a planning tool, you got the history, so it's kind of, it's easier. It's just you just need to modify those numbers that you've had in the past to see what you can, how you can improve your circumstance. The starting a brand new business is the difficult one. It's where and sometimes making these guesses as to what, and in that particular case, that's where you need the bigger variability of flexibility in that budget, because there's always going to be some things you don't anticipate. We usually, when we've helped clients, particularly with these projections, and I can remember in the past, having one that said, okay, this shows you can repay the note, but there's no cushion. That's generally not a good thing, because there's always going to be unanticipated expenses and always, delays and weather. Today, it sounds like the big unanticipated thing is knowing when a product or a purchase or whatever will show up. Shipping and all of those kinds of things have gotten very, very difficult. The supply markets are very tight, and where I think from an efficiency standpoint, American industry has gotten to where, no, you don't stock things, you just order it and you get it the next day. Amazon Prime, I guess, in our personal lives, but also in business, that's been the strategy, and all of a sudden that's getting upset. And it's so then if I can't sell it because I don't have it on the shelf, then what does that do? How do I anticipate those delays, and how do I factor in those things? There's no magic formula there, and there's no magic contingency in there, but that's a thought process you have to go through in order to incorporate that into your budget. I've spoken now for a good while straight, so hopefully somebody's got a question out there that I can that can generate some more discussion.
I wish I'd come to you for my business plan, because that was hard.
It is, Colleen,
I
and
know what
I
I was
would say,
doing.
you're talking about a business, to talk about the venue, you're talking about a business that doesn't have a whole lot of places around here to even go. Now, I've suggested to folks in the past, I want to open a business, and it's kind of like this one, and you can actually get a lot of information from another business owner by just asking them. A lot of people.
But there's nobody.
But when there's none.
It's just a venue.
Right.
It was hard.
So then you have to travel a little bit to go do that, and go outside in certain areas, and in some markets it obviously has differences there. Conceptually, I think it's a great opportunity, and I just watching some of the things you've been doing with it, I think it's you're certainly on the right path. What's that magic thing to get you over the hump into where you get reoccurring things, and you never, okay, well, we're booked we're booked 45 weekends, so now, I'm not going to worry about it.
I'm doing well, it's crazy because I don't know how I opened during a pandemic, but it didn't seem to affect me. I think because I have outdoor space, my numbers could be higher.
Yeah.
But also, I'm not dependent on weddings and receptions. It's more parties and small gatherings, which has been fine.
And obviously there's a market for wedding venues. I mean, I can understand that there are people that just want to just do that. Giving yourself some flexibility, though, to do other things and keep yourself from getting branded as only this or only that.
I always joke around, but I'm serious. Like, if somebody wants to teach a yoga class in there, I'm down. I don't care.
Yeah.
As long as you give me my rent.
Well, and we did the same with the auditorium. I always wanted to encourage social and cultural uses of the facility, because I saw that as a role for the city. We should promote that kind of stuff. Do you know when the church wanted to rent it for Sunday, which wasn't a day that we really had a whole lot of stuff? That's a check that came in the mail and was there every Sunday. And so, that helps to spread those fixed costs over more rental days and so forth. So it's a balance. Now, I wouldn't want it to just become a church, because we would lose on one side. But on the other side, I do think the other thing is, there's facility size is also one of the factors in that yours is a venue for a particular that's well suited. There could be an opportunity for somebody with a larger one, and there could be an opportunity for somebody with a smaller one, just because, or the same person for different sizes. Or having the ability to close off and that type of thing, to shrink those sizes, I think.
I'll just rent out the downstairs, not even, because I didn't think about that, other people did. They were like, well, what if we don't want upstairs and outside? I was like, well, I guess I better come up with something for that.
Well, you do have a little bit less cost in it. Of course, you'd have a hard time renting both at the same time, so that probably wouldn't work, but. Yeah,
I do double book.
You may figure out a way to do it. Yeah.
Double booking has been it's been okay. Like a shower, and then a wedding at night, or a shower, or graduation, or whatever. I don't know. It's just been. I have random things happening after funeral get-togethers. I've done 3 of those. Like, I don't even care. Whatever.
Right.
I'm not here.
Yeah,
to
it's
just
probably
be
not a business. I mean, that's a rental. You probably never. I mean, I would never have thought of that either. That's a business opportunity.
They don't want everybody going to their house.
Exactly. Maybe the house is too small. I got a bigger crowd, or
roll out
whatever. Or the funeral is taking place here, but the family's all spread out all over the place, and so having a place like that.
So I've done a lot of interesting events that I never thought about before. But it's been very good to me. I am able to pay my bills.
Good.
My 2 loans that I got, because one wasn't enough. So I feel I get it.
On that kind of renovation, you anticipating all those costs are, believe me, in the levy district arena, all of our projects, we start out with a cost, but there are always things coming up that, and I mean, a lot of times you hope anyway, that it's a dollar spent today that's going to save you $3 later, in operations cost and those kinds of things. And that's the same thing that'll happen when you're doing one of those. Well, while I got this wall ripped out, if I don't change the plumbing, I'm going to have to do it after, so I'll just assume do it now.
Yeah, I already have a window ripped out today, as of today. My garage door window is out. We're having to replace the whole thing and add an awning, another patio cover. But this is one of my questions, because people come to me all the time in Berwick, or want to open a business. They can't do it if they don't have any collateral. They can't go to the bank. So there's that, and then they just stop, and that's it.
Yeah.
I don't know what to tell them, because I learned all that on my own. I just happened to, Christopher Reggie sent me a random business plan that he used, and I used his template. And I just kind of ran with this template, and we talked about it, and he's my daughter's age.
Yeah.
He's not even,
Yeah.
But that's what I started with, and I had no idea, but I had to plug in what I thought. I had to do a lot of research, but even though I went to the bank, I still had to pay a lot of out-of-pocket before I even got that loan.
Right.
So how do you help other people?
That
Well,
person that,
My storages, and I guess the storage store is my collateral. So if I go down, it goes down, but it's also paid for. How do you help other people that don't have this kind of, you know what I'm saying?
I'm going to share with you my
I don't know.
experiences now. In your case, you had a very capital intensive business. Okay, it's all about that building. So all that money's going to go into the building. The interesting thing that I'm seeing today, and today means over the last several years, but there really are a lot more business opportunities that don't involve big investments. That really is about either selling my time or finding some new internet-related type operation that I don't understand. And I'll be the first to admit I don't know where they get these ideas and how they come up with this stuff. But in a lot of cases, it's worked. And believe me, I've seen plenty of people though who have started businesses on their credit cards. And, that's not a good thing. I wouldn't recommend it, but it's happened. Or use the credit cards to make that working capital that they didn't anticipate needing, because the collateral is all used up on the loan. The whatever equity they did have is already in there, and they don't have any other places to go. And it's an extremely expensive. The worst that I've seen. And I've had two experiences with this, one of which was unsuccessful, one of which ultimately was successful. But those daily repayment loans, have you ever seen any of those? Basically, there are these companies, Evan, you may have seen these, but there's these companies that will loan you money and you pay them back every day. And they basically draft your account every day. Well, and when I say every day, it's whatever number of days you're operating. In other words, if you make a deposit 5 days a week, typically it's that type of business. They'll draft your account each day for that loan payment. Now, I've tried to figure out what the interest rate on those are, and it's one of them 25% or better or worse type of loans, and I'll share this with you. Just it wasn't a business in town; it was out of town. But and I kind of came in late on the game. They had already, of course, they had equipment loans for vehicles and other pieces of equipment. They had factored their receivables. Okay, and it's one of those deals where they were growing real rapidly. So that was what I think they assumed their problem was. It was just a cash flow problem. Really, was they weren't making any money, and ultimately that was what the problem was. So they had factored their receivables, which means the bank had that collateral as that. Well, they'll still make you these loans. These finance companies will make you these loans. They take a blanket factor on your receivables, and I don't know the legality of this. So just I'm gonna give you the layman's version as I am when I looked over the documents. I love to practice law, but I'm not qualified. But they take a preemptive judgment basically, so that it saves a step when they have to foreclose on these loans. And so anyway, they put the money in your account, and then every day they draw a loan payment on it. And then at some point, you'll say, okay, well, I need an extra whatever, until they redo the loan, and they, take a few more fees and all those things, and then put some additional money in your account and take those daily draws. And it was in the first case, it was somebody who really, their credit would not allow them to borrow otherwise, and they did it. And they struggled with it, but ultimately got themselves in a strong enough position, bought their building, got a traditional building loan after that point, and the business, no reason to think they won't be around for a good while, and have gotten over it. The other one, just they couldn't keep up. I mean, it was constant back to the well, and ultimately ended up going under as a result of it. But it was something I had not seen prior to about 4 or 5 years ago, but apparently, I know just my email inbox, I get, hey, do you need capital? Here's we have $150,000 waiting for you. Just pick up the phone. And so, you get on a list somehow, some way, and there's these companies out there soliciting. So let's not give that as advice to how to get financing. But I think the beauty of it is that there may be some opportunities for financing for new businesses that are not so capital intensive. Those that are capital intensive, it's basically going to be, got to have some collateral, and I've got to have some equity. SBA still makes SBA loans, so there's still those possibilities. But look, that's all about the equity. Now, one thing that with an SBA loan, if you have an existing business and the business has some equity in it, in other words, you got a balance sheet with capital and retained earnings, or whatever in the business, that can be your equity percentage. So if I've got a business that, okay, I've been around for a couple of years, I really need to grow the business, and I've got $20,000 or $30,000 worth of equity in the business, then I can go and borrow $150,000 or $120,000, whatever that ratio would work out to, from the SBA, or from the SBA. It's actually a bank loan guaranteed by the SBA, and actually get make that work as far as an expansion type of thing. But that equity issue, typically for a lot of small businesses, is the struggle. Collateral then ends up having to come from a second mortgage on your home, or mama's home, or whatever.
I'm good now. Summer was tough. I think just because it was my first summer and everybody was discombobulated with COVID and all their parties. I don't know. I don't know how I manage every month to come up with the loan payment. Like this month, my checking account was down to next to nothing. And I knew my loan was coming. I started panicking. And then this wedding in April, she messaged me and said, hey, can we pay the balance now? And I was like, sure. So, and then the next thing I knew, my program automatically sends you, it's time to pay, like it's in installments. And so then another 800 comes in, and then it just started to happen, and I was like, wow, I was about to be down to paying it from my own, but I didn't have to. Well, of course now, when April comes, I won't have any, I'm done.
Yeah.
When that wedding happens, except for our alcohol, because they pay for that after, but like the wedding we pay for, which is kind of a bummer, because once it, but I don't know how every month I somehow managed to
What were
pay it.
What were a couple of the expenses that you really had no idea you were going to end up paying?
ADT was I thought, okay, maybe like 5,000. It was like 17,000 because I didn't even have a sprinkler. I don't have a sprinkler system, so I got out of that. That was another 70. I don't have a working kitchen.
Because you don't have a working kitchen, you're not required to have that.
But I had to remove ceiling and floor to have the amount of sprinklers. That was one of my big ones. It seemed like everything that I wanted to do was $6,000. It's still happening. Like The retaining wall that we had to put up,
Mhm.
$6,000. The patio, $6,000. The one I'm waiting on, 6,000. I mean, it's like everything just snowballs. And then like now I'm having to fight to get things fixed. I just made a year and I still have leaking water, you know, stuff like that. Not the existing old building, all the new. And just repairs it.
Yeah.
I'm not paying for that because that wasn't on me, that was my contractor.
Right.
But it's, the whole point is I had to go to a lawyer and spend $5,000. And I never even pursued it because he was just like, well, you know, you don't really have it. I'm like, oh my God. So like survey, that's another $5,000. I didn't do it because I'm like, I don't even care at this point.
Mhm.
Just like every little thing is just another unexpected,
That's,
irritating.
and that's really what I meant too, in that when we talked about the new business, really anticipating all of the
All the
little things that
ADA,
come up.
oh my God, the
Yeah.
fire marshal. That was another, the fire marshal came in and told me I had to add hand washing sinks and this and that and this and that. Well, I was aggravated because I didn't know,
Mhm.
and I felt like my contractor should have known
Yeah,
that,
yeah.
and my architect.
Right.
So I had to, I'm still paying for things like
Mhm.
that, but as far as, like I'm tapped out of the loan, I have 2 of them, because I ran out of one. Well, I started out on my own, and then I have 2, I'm tapped out.
Mhm.
Like now I crack up because the loans, I pay one and one of our other businesses pays my other one, because I can't afford both at the same time. I'm laughing because I literally pay that loan out of that account,
Mhm.
out of my old building account, and I'm like, this just doesn't even make sense. I'm just paying myself back.
Mhm.
But, I mean, Patterson State Bank has been amazing. Whitney wouldn't even look at my business plan. Not even, and that's another thing, like, you don't know who's gonna accept you and who's not.
Yep.
So, it's a mess.
No, bank financing still is, you know, it's the old adage about, well, if you don't need the money, they'll loan it to you. If you do, you know, it's still a real challenge. And the alternatives are just expensive. And
Very.
that was my description of this daily loan payment thing. It just,
It's convenience you're paying for.
that's it. And they'll certainly make it sound like a good deal, but you know, if you're making any money, it's all going to pay that interest
Yeah,
cost.
and I struggle with like, what are my expenses? What counts? What doesn't count? Like, what, I mean, I see things.
Well, you have a little bit of a double situation there in this regard. You know, first off, I tell people, look, if it's a business expense, it's deductible. You know, so you know that's the general rule. And there really are almost no differences whether you're an individual, a C corp, an S corp, or a corporation or a partnership. The tax law generally treats them all as business expenses. Now, there's some specific differences that you know, it's treated this way on a partnership, but this way on a C corp.
Right.
But very, very few of those, so they're not worth going into a lot of detail on. So they're generally speaking, business expenses are all deductible. As a venue, if all you were a rental, then yeah, the number of expenses would be, you know, business expenses might be smaller, if you will. But you're producing events, and yes, you're just hosting in some cases, which means, you know, all I have is whatever the direct expense, you know, was, and then of course always the facility cost. But in those particular cases, all of the promotion, all of the supplies and
Right.
everything else, I mean, that is all legitimate and business expenses. And then after that, we end up with a few things that have some limitations that are either partially or total, like, you know, kind of going through the cycle with meals and entertainment. You know, entertainment is not deductible. Meals in restaurants are, in 21, 100% deductible. In most years, they were 50% deductible. That was just a little quirk they passed due to, it was in one of that CARES Act or something, to give a little incentive to go eat at a restaurant. They, you know, for this particular year, it goes away after this year.
But then, like, I didn't qualify for the What was it then?
PPP?
Yeah, I didn't qualify because I don't have any employees.
Yeah.
Well, that's rude.
Yeah.
I am the employee.
Well, in,
I'm the one that invested in it, and I missed out.
You should have been able to.
they're actually, yeah, and what happened, the second iteration did provide for self-employed individuals to apply for PPP loans based on their income, okay? Now, it's a little bit of a trick in your particular case, and I don't know your personal
Yeah,
situation,
no.
so I'm just gonna say general, I can see that there would be a little bit of a particular problem in your case, because if you're just a rental business, then you're not self-employed. If I'm producing events and so forth, then I am self-employed, and so, you know. And then of course it has to be based on your profit, and if you're, you know, just starting out and you got a COVID year, you might not have a profit. And they actually though came up with, and this, I didn't have anybody that really pursued it, because really by the time all this came about, the money was all gone. But they actually had some language for self-employed individuals to base their PPP loans off of their gross income rather than their net income. And like I said, by the time that got done and out, most of the money was gone already, so it didn't really get pursued. But yeah, that was a case. I had some folks who kind of in the same situation. I didn't make a profit last year for a variety of reasons, so I don't qualify for the PPP loan because I don't have any employees either. And that was it. Now, if you had employees, it's strictly based on your payroll. That was the only qualifying number was your payroll. So
I'm not there yet.
Yeah.
I cannot employ you.
Well, I'll say this as a general rule, general observation. Small business, for all small businesses. You know, we talk a lot of times about the structure and about how we want to be set up for tax purposes and all of those kinds of things. And really for a lot of small businesses, particularly if it's a sideline and so forth, I don't encourage running out and, well, let's go incorporate, or let's go do this, or let's go do that, because it's okay to start it small and just handle it on your individual tax return. Kind of simplifies things a little bit. But when you say, well, I'm going to have to go out and hire somebody, okay, that's a whole different
It is. That's why I'm not about hiring anybody yet.
You go from a simple, uninvolved sideline, hope I make a few bucks type of thing. Now I got people. Okay, whole new deal. Taxes, workers' comp, insurances, all of those complications come about. And then from a small business perspective, you've got to be able to budget for all of that and prepare for all of that. And there are, if you can afford it, there are services. There are payroll services that can really take a lot of that burden off.
I did just do that. I got with Gwen Luke.
Okay.
She does our personal and stuff. Finally, the other day, I was just like, I need you to help me. I'm getting stressed out about my taxes, which I've done for the last year by myself, but I just don't feel like I'm doing it right. I feel like I was paying more than I should have because I don't know. So she's fixing it. She's handling it.
Yeah.
So yeah, I'm at that point where I can actually afford to pay her to handle that.
I have, over the many years, have had a lot of clients that have had that conversation with. At whatever point in your business, you have to evaluate where you are. If the great majority of my clients were all capable of filling out a sales tax return and capable of handling their payroll, maybe not their quarterly payroll reports. That's the IRS. It intimidates everybody. But they're capable of doing it. But so what you have to look at is, what is the best use of my short time? I'm out here worrying about this business. I'm trying to get a business going. I'm trying to make sales calls. I'm trying to meet with customers. I'm trying to do all of those things. If I got to also come home and do this little piece of paperwork and so forth, sometimes that takes you away and becomes this worry that keeps you from focusing on the important things. And so that's where paying somebody to do it really, okay, I can afford to now, or maybe from day one I should. Hey, let me just go do that so I can spend my time really marketing the business, growing the business, getting the right staff, getting the right equipment, getting all of those things, and that's the evaluation you have to do. Today with QuickBooks and the whole variety of different alternatives you have, you can handle all of that. I mean, it's easy or easier, but is that the best use of your time and resources? And so we always encourage folks to give that some serious thought. I mean, we're in that business, so we do that, and we can take that burden off of you, but that comes with a cost. But it's a matter of that evaluation.
I had a question. What if you are trying to start something new? You said that's the hardest thing to do, is to do something new. Is there any kind of thing besides maybe going to talk to someone in another downtown? Like they used to have, like they did a downtown study here in Morgan City, and they said that, we had enough of this type of business, but we didn't have enough of these others. Would anybody have any access to any of that, like data?
Like a market analysis?
A market analysis.
So whenever I do them, I mean, the way I do it is it's a lot of information. Usually I get it from like the Department of Business Statistics or the Census Bureau, for example, or two resources that are helpful, but especially when it's coming from the federal government, so the accuracy of it is very delayed. So for example, I just completed a market analysis on the Sleep-In Hotel in Berwick, and the most recent data that we could
I
get...
just got that email
Oh, really?
from Gary.
Yeah.
Yeah, I don't know what to do with it. What do I do with that?
Well, we can talk after it.
Okay.
But what the basic information I had to use, determining, if this was going to be, redeveloped into a multifamily, property. The information we had as far as rental data, I think the most recent information, I think in Louisiana was March of this year. So I mean, that the likelihood of that changing to now is slim, but still, I mean, that information, if you're especially someone who wants to invest in something, a pretty big project, they're gonna have to play around with those numbers, especially with COVID and depending on the recent storms, how many people are gonna come in, all these external factors. It's gonna be hard to gauge. But I mean, from a small business perspective,
Ice cream store.
I would for an ice cream store. I mean, I would say the easiest thing that I do when I talk to people who are looking to start a new business is one. I mean, from a community standpoint, is there a need? Is just an apparent need for it? Mm-hmm. So, for example, I mean, I talked to someone who wanted to start it was like a plant store. Okay, well, one, in looking in St. Mary Parish or in the municipalities, do you find that your resources being put to that, would that have a need? Would you be able to make that survive? Realistically, I mean, one, having an interest, it's great, but it's very difficult, I find, as heck, if it's just a hobby or an interest in turning that into a business model, especially without the resources that are there. I can provide any of that information, but you have to say, like, to get that information, it might be very discouraging.
All right. And let me just pair it with what Mr. Mott said earlier. Like he said, he kind of walked people through like a business plan. So if I was trying to do something different, could I take, just kind of do your best homework, even talk to someone who's maybe doing it in another town, see that market analysis, and then walk through the numbers. And is that something that you do? Like, let's say I don't want to struggle on the end. I'll struggle a little bit at the beginning and pay Mr. Mott maybe a fee for you to walk me through that, and I can see the numbers before I go in and dive into it. Is that something that is realistic, or?
Yeah, and I think what you end up having to do in that particular case, you need to look at. You need to take that trip out of town or wherever, and if it means to go and sit in the parking lot watching how many cars pull up at the plant shop in Thibodeau, and what's coming out the door, and then maybe go introduce yourself to the owner and say, hey, I'm thinking about opening up one in another community. Would generally, you'd be surprised how much they'd be willing to share with you, really, in a lot of cases. So then you come back and say, okay, well, let's suppose I do that. what might be my cost from the fixed cost standpoint? What would be my variable cost in that particular thing? And then, okay, what's the gross margin, and then what would I have to generate in sales? Ooh, that doesn't sound like that might be difficult. Or, yeah, that sounds reasonable. Now let me take it and share that number with somebody and say, hey, what did I forget about? What did I not include in here? Well, you're going to be open 7 days a week, or you've got somebody to work on weekends. What happens if you get sick? That kind of thing. And kind of go through that. And I agree with a lot of times those hobbies, you enjoy doing them, so you figure, well, there's got to be a way I could enjoy this and make money doing it, right? And it's not always that easy, believe me.
But just the need, like
Yeah.
you said, I think we had talked about, like, I don't know, just something I told y'all last time. The first thing I learned, one of the first things I learned in being on the council, we went to a meeting, I'll never forget, they said, you have to have something for breakfast, lunch, and dinner. And in Berwick, we have one restaurant, hit or miss. We have Stazione, it always has food.
Oh,
But would we have the need for
So-
a coffee shop
Right.
or a ice cream shop or something by the river? Yes, we
Yeah.
do.
And see, and it's interesting, like in St. Mary Parish, I find it very interesting, especially in the east end of the parish, because between Morgan City and Berwick and Patterson, because of the close proximity to each other, well, I mean, I would say that because Morgan City with more restaurants, more stuff to eat, well, the community in Berwick, while there might not necessarily be a demand because it's very close to get it, the town of Berwick itself, like the local community, would absolutely have a benefit.
Right.
But I guess when you say like the need for it, how do you justify when you can say, okay, well, I can travel 5 minutes to get something to eat? Now, that's more just looking at it from the perspective of, okay, like wanting to start the business. I would say, looking at Berwick as just a singular entity, I would absolutely say yes. Berwick has an absolute need for more of a established tax base, just because, I mean, Baldwin's another example too. Baldwin has almost virtually no business tax base. It's almost 100% just a residential community, and that's a concern. Is because even if they would raise property taxes in Baldwin, it would almost have no effect on the economic condition of it. But one thing that I do want to say to you, as far as like financing of small businesses and startups too, is so South Central Planning has a loan committee that the only way you can even go to them to request a loan is if you're denied by a bank. Now, because it's a government entity and it's funded through the U.S. Department of Commerce, they legally can't compete with banks, but the process to apply for loans is almost the same exact process. So equity, collateral, and you have to have a business plan before you can even discuss anything with them. I will say that the threshold might not be as high as a bank because you can only go once you're denied from a bank, but the loan board members, so I sit on it, but the bulk of it is bankers. So their mindset is going to be, okay, we're operating as a bank, which has its pros and cons, but I mean I've seen business ideas that realistically to me I think that it'd make a lot of sense. The business based on the business plan, it could be successful, but you have that mentality there where it's, oh, well, we're not really thinking of it as these aren't this isn't a bank fund, this is just a revolving loan fund, let's just use that. So it's another opportunity that I do find that especially startups can go and pursue, but I do find that there is more kind of a paperwork and they kind of expect the same kind of threshold to meet that banks will require.
This is for people to rent. Do I get people that are committed before I even do that? What if I build and they won't come?
Mr. Lott, what would, if I came to you and I had maybe my plants idea and I had gone to talk to somebody in another town and then I started putting those numbers together and I brought it to someone like you or Miss Luke or somebody else to walk me through that business plan to help me make sure my numbers were realistic. What kind of money would that ballpark?
assuming that you've done the work, meaning you've come up with the numbers, not, hey, would you figure
No,
out some
no, no,
numbers
no.
for me? And, but,
Kind of
somewhere
verify.
in the $200 to $500 range, I would think, something
If
along
I,
those
if I
lines.
spent that up front, it might save me from going way far down
Hopefully, yes.
to consult a professional
Yep.
early on
Yep.
to help me anticipate some of those
And
unexpected
I'm talking
costs.
about the little plant shop or something like that, yeah.
Yeah, if it was something bigger,
Yeah.
of course it would be
Right.
more.
Open an auto dealership, no, that would be a little
That would-
more involved.
And then, Mr. Woodrow, you spoke earlier about being consulted. Persons who are thinking about starting businesses could give you a call.
Absolutely, absolutely. And that's the biggest thing that I find, frustrating, just Louisiana as a whole is, our economic development incentives are primarily geared towards large employers. I mean, for the most part, the state doesn't have much for you if you're not going to say we're going to come in and employ at least 100 people.
Okay.
However, the state does offer certain like small business programs, whether it be certain certifications, so you can be minority-owned business, which, depending on the business, opens you up to contracting opportunities. For example, they also have different types of developmental workshops. Or one of the things that I feel the state does very well is the mentor-mentee program, which it basically looks for startups or small business owners and partners them with a CEO or an executive at a company that's in the same general field, but of a much larger company, and they give you that one-on-one advice. And it's something that when you apply and you get selected, there's no cost associated with it through the state, but the resource that you can get from that, especially as having a mentor who's started from where you are to the point where they're a very successful leader, I mean, the information standpoint is very valuable.
So it wouldn't be too late for, say, Ms. Askew.
Oh, not at all. And these programs, they're basically on a rolling basis.
And
So.
is that minority a woman or is it a minority?
Well, there's minority, which they classify women. They also have a women-owned business designation as well.
Yeah, we were,
have a ton of ideas.
we're teachers, we're, like even our rate of pay, I mean, we can't get over, I can't get over some of the numbers, coming from the teaching side of it, But although those services that you mentioned earlier would really speak to teachers.
Yeah, very much so. A business that's not capital intensive. It's a service. It's personal based, involving technology or utilizing technology to a great extent. Can kind of reduce that benefit. If your business is gonna be landscaping, since we've got a plant business going, we have a landscaping business where I got to go out and buy equipment, and there's going to be perhaps employing individuals and so forth. Well, that's going to mean some amount of capital investment, but there are a lot of service businesses that wouldn't require a whole lot as far as that's concerned.
And we do have a lot of teachers in St. Mary, and even tutoring could be a service.
Yeah, yeah, and I think, and there's some rule about tutoring, and I don't remember what it was. Is it that a teacher can't tutor in a subject that they're teaching or something along those lines? You guys, I'm looking at you.
I've never heard of that.
Some kind of ethical violation with
I've never
that.
heard that.
Okay,
Never heard
I
that.
may be wrong about that then.
Well, in that case, I could do business courses.
No,
No.
since you're not getting the check from the school board, you can do whatever the heck you
That's
want
right.
to do.
Oh, you mean like in school?
Yeah, while you're a school teacher and then you're
okay.
tutoring, that's where I
It
understood
might
that
be
was a problem.
retirement, get paid, it may.
Well, that's return to work, that's
yeah.
the return to work, you can't go back into the system. Like
No,
you-
what I was saying is if you were a school teacher, meaning you
Mhm.
were employed by St. Mary
Right.
Parish school system, that maybe you can't tutor students who
I'm
were
just working for the
Yeah,
school
that-
system
yeah,
possibly,
yeah.
maybe.
Yeah.
at the
You'd have
same
to do
time
it,
that you were
yeah.
doing it, but anyway.
That would be an interesting
You
one
get
to
paid
explore.
more, I mean, retirement might come into that too. Um,
2 hours.
So you need money first, you need capital, you need,
But you need an idea. in
what
business.
was, the idea is, somebody has an idea, so you need that, and then you need the budget first.
Well, yes,
that
I
would
mean, I think with, the opportunity with the budget is this, that you will determine what that investment is going to be, both from a time standpoint, and then from a resource standpoint, in order to get where your ultimate goal would be, which is to have a profitable business that's going to put you in a position to receive a legitimate amount of income for both the time and the capital investment that you're making, a return on that investment, and do so over a reasonable time frame. I think most folks understand that you don't just open the door and all of a sudden you're rich.
Right.
You open the door, you build and you work and you struggle and you get to a point at some point where you're making a profit and grow that from there. So the idea of the budget is to determine what that capital investment needs to be, what that other investment of time and resources needs to be, and then ultimately, set some framework for you so you know how long this needs to last so that I can get to that point. And then, still a useful tool for an existing business to say, okay, I need to pay my note. That's what my note is. This is what my return on investment needs to be. How many days rentals do I need to generate and work your way?
And how do you tell people that you know that you cannot give them a deal?
Yeah.
That is the worst part, I
Yeah.
think, of my job. Not cleaning the toilets. It's when people say, hey, can we borrow your building for an hour meeting or
It's
something?
for a good cause.
I don't know how to do nonprofit. I don't
Yeah.
know how to deal with that. Do I charge them? I can't just do this for free.
Yeah, about the
That's
only thing
where
I
I
can tell you
struggle.
is that, well, I already gave you my nonprofit rate. You should.
People do ask me
No,
that.
I understand. I understand. I mean,
But we don't want it for 3 hours. We just want it for 2, or the minimum is 3.
Right.
So then I get to be soft,
Mhm.
and I'm like, all right, I'll just
Yeah.
cave. Like somebody asked me today, how much would it be for 2 hours, very small,
Mhm.
it's always very small. And I'm like, I literally work on a website every day. Could you look at my prices so I don't have to talk about it out loud?
Right.
Because it's awkward.
Yeah.
That's my struggle, talking to people about prices. Like,
Oh, yeah. I think that's
and I just went up on my hourly because I just felt like I wasn't even.
That was your nonprofit.
No, yeah, like it's just me, so I have to be there all day.
Right.
Set up, pick up, clean up, during,
Yeah.
make up, anyway.
I totally understand. I agree with you.
Yeah, can you do my taxes for free? That's what I'm saying, like people
Yeah.
do that,
Yeah.
and how do you say, no, I'm sorry, I have to pay my note, without being rude
Mhm.
and getting slammed on Facebook? Because that's the thing now.
Yeah, it is. It certainly gives you that, that marketing opportunity. It's been an amazing transition in this respect. As y'all know, my roots are in the retail, department store.
Yes, I was thinking about
And I
that
could
all.
remember, there was not a newspaper that didn't have an American department store or an Anthony's department store ad in it. There was not the circulars, Christmas time, the circulars that would come out and all of those, the amount of money that was spent
Oh my.
on newspaper advertising over all those years. And, today, we're gonna have a 2-day-a-week newspaper.
I've never even paid for an advertisement.
Wait.
The chamber does it for free.
Yeah,
The
review
newspaper
is
go to 2
dropping to
days
2 days a week.
Really?
Yeah, yeah.
Everything's online.
Yeah, it just went away. It's just amazing.
I guess you must have missed that article.
It was in the circular yesterday, nice
I
letter,
missed it.
nice letter written in the circular yesterday.
I saw it online.
You saw
Somebody
it?
sent it to me online, so I don't know where. I
I
didn't-
saw it online.
Yeah.
Okay, I like that.
But yeah. And
I don't
mean,
even pay for a newspaper at my building, and I get one every day. I get a review. I do not pay for it.
We've always had a
It's just
subscription.
because the girl that works for them
We-
just throws me one. and
Yeah,
I'm
we
like,
get
okay.
them, some days we get them, some days we don't. I don't even know. I thought maybe they'd already cut back, because I wouldn't get one every day.
kind of like the phone, who has a house phone now.
Yeah.
They just have a-
Yeah.
I'm
Okay, so,
Got any other questions? Because I know my video's probably about to go out. No, budgeting, any?
no, I just, this would be a service possibly later, possibly to offer budgeting services, Excel.
Like
Okay.
for private?
For private
Mhm.
companies.
Yes, we
Yeah.
might be able to help with those
Private
costs.
Okay.
So we want to thank Mr. Mott.
Yes.
Yes, thank you.
Really welcome.